The future of trading is here, and I'm absolutely blown away by how this 3-step mechanical rule-based system has made me thousands and hundreds of thousands of dollars online as a 23-year-old living in South Africa. I've spent years and thousands of dollars experimenting and learning and researching about artificial intelligence in the stock and forex markets. In this video, I'm going to show you some of the best ways that you can use AI and this 3-rule mechanical-based trading system to make money, remain consistent, and remain profitable on your trading or prop firm account. If you don't know what I'm talking about, I recommend watch and listen closely as I'm going to explain to you this one-to-one risk to reward 3-rule mechanical trading system that allows me as a $500,000 prop firm trader to win 8 out of every 10 trades that I take, and exactly how you can do the same while using this 3 mechanical rule-based system on my prop firm account. On top of this, I am passively running an artificial intelligence tool on my personal trading account that is making me anywhere between 20 to 40% per month, while manually trading using this 3-rule based mechanical system on my prop firm account that is making me anywhere between 5 and 15% per month on my $200,000 funded account. My name is Jay. I'm a full-time $500,000 prop firm trader and a supercar enthusiast from South Africa that documents and live streams all of my trades to my Discord community. I post all of my webinars and course content on my YouTube channel. If you want to learn how to manage your personal accounts correctly and become consistent and profitable in a long-term basis, as well as pass your challenge accounts and become a funded trader and remain profitable on your prop firm account, make sure that you subscribe to my YouTube channel with the red notification bell on, leave a like down below, and I will look at doing a free $20,000 account giveaway in the next video. I'm going to be dropping some juicy, valuable tips that you can apply to your trading system to become a profitable, consistent, and a funded trader. My system is a very mechanical rule-based system. It's taken years to figure it out, but once you figure it out, it's very easy to apply. Essentially what I'm saying is this YouTube video that you're watching right now is 3 years of research, heartache, losses, going through indicators, various systems that have never worked for me in one simple video for you guys to shortcut that entire process. First up is to go and create your account on tradingview.com so that you can have access to any live market and charts in the world. Secondly, you will need a broker in order to go and trade these live markets. How this works is you deposit your money into your broker, you then access that account on the trading platform called MetaTrader 4 or MetaTrader 5. If you are wanting to become a prop firm trader where you can get funded anywhere between a $10,000 and $200,000 account to trade with, where you keep 85% of the profits, then I recommend come over to a prop firm that I use called Blue Guardian. The reason I use Blue Guardian is because they allow any type of EA and artificial intelligence. They give you no time limits and unlimited time to pass your prop firm account. Their payouts are super quick, from anywhere on the same day to maximum 2 days. Once you've grabbed your prop firm account or created your own personal account, you are now ready to go and trade. This video will include a little bit of technical analysis. However, it's a very mechanical rule-based system that you can go and follow and apply. So I recommend save this video to your watch later so that you can watch it more than once, because there's a saying, it takes the average human to hear something 8 times before they understand it fully. So make sure to go and grasp this concept, practice it on your charts, and you will start to see for yourself how you will always be on the right side of the market and execute your beautiful trades. First and foremost, step number 1 and part 1 of this mechanical rule-based system consists of 3 time frames only. Come over to the 4-hour time frame on any chart. My preferred pair is XAU USD. If you're a newbie trader or a beginner trader to this concept, I recommend focus on one chart and master that chart only. Just to quickly give you a quick understanding and breakdown of how this works, the markets will always be printed to you in the forms of higher highs or lower lows. Now, many traders struggle to understand this concept. You will see most mentorships, most trading communities teach this, but how do you actually go and apply this to your chart? It's actually one of the easiest, hardest things to do, but once you get it right and start seeing it clearly, you will always be on the correct side of the market. So if we come and have a look at XAU-USD on the 4-hour time frame, which is gold, the first thing I go and do is take my horizontal line and I will mark out the last 2 months of price action. So over here, we are currently in mid-July. If I come back towards the end of May and we take a look at most recent price action, we had a break of structure to the downside right over here, which you can go and label as a 4-hour break of structure. All you need to go and do is find the high that caused this break of structure, the most recent high, which would be this wick over here, which you can then go and mark out as your 4-hour strong high. This is a 4-hour strong high because it took out the most recent week low. After price has that break of structure, price will 100% of the time do this. It's how the markets move and it's how they are foundationed. Is price will have that pullback into the previous 4-hour swing range from the old 4-hour low to the 4-hour high. Right over here, price will have a pullback into that swing range, mitigate it, and continue targeting these new weak lows. Alright, so after price had this pullback into the previous swing range, that then allows us to mark out our new 4-hour week low, which would be over here. Price then had that 4-hour pullback, that bearish shift, which indicates price is now ready to go and target the 4-hour week lows. Right over here on this candle, body closure is considered as your 4-hour break of structure. I want you to take a note of this. Every single break of structure is only valid with a candle body closure. These wicks over here do not validate as a break of structure. Super important to note that. Now, all you need to go and do is go and label this as your 4-hour break of structure and go and find the most recent high that caused this break of structure. The most recent high was this high over here. Alright, because we had high, low, high, low. This was the most recent low that took out the previous 4-hour week low. So this now becomes our new 4-hour strong high. Alright, we can then go and remove the previous 4-hour strong high because that is no longer valid. We only look at most recent price action. Alright, hopefully you guys are still following with me. If you are still struggling to map this out with me, make sure to send me a message on Instagram. I'll leave a link down below and I'll help you out there in the DMs. Alright, so after price had that 4-hour break of structure to the downside, price had a very small type of pullback. It didn't pull all the way to fulfill the entire previous swing range. However, it did mitigate some of it. So this pullback over here would validate as a pullback. So price had that big pullback, which we can then go and label this as our H4 or 4-hour week low. Price then had a very mini pullback to then ready to go and target these week lows. All right, price then created that break of structure to the downside. That would be our 4-hour boss. And now what can you expect after a 4-hour break of structure? Comment down below if you know. Is that pullback into the previous 4-hour swing range, which is the range between the previous 4-hour strong high, which the most recent high, the highest point in the swing range that caused this break of structure would be this high over here. Alright, so this was the break of structure, that pullback which created that entire shift to target these weak lows. So this would be your 4-hour strong. So after that most recent 4-hour break of structure, as I mentioned, what can you expect? Is that pullback into that previous swing range, which then after that pullback happened, we can now go and label our 4-hour week lows. We can now expect price to go and target these weak lows. A quick question for you guys. What would happen if price had that body closure above the 4-hour strong high? Your entire 4-hour time frame would now shift from bearish to bullish. So if price has that body closure above, all right, we can remove the strong swing high over here. If price has this candle body closure above, price will then create a 4-hour strong low And what can expectational order flow be? Is for that 4-hour pullback to mitigate areas of the previous 4-hour swing range, to then go and target these weak highs and to continue with that order flow. So once you understand how to map and mark this out, you will get such a clear, crystal understanding of exactly where you lie in the market, where order flow is going to go, which allows you to operate so much more clearer and easier on the lower time frames. All right, so let's go and mark out our most recent 4-hour week low, which would be over here. So this would be our 4-hour week. So this is where we are currently on XAUSD. So as price lies, expectation is for price to target these weak lows. All you need to go and do is react to what price prints for you on the lower time frame. And we only operate on one lower time frame, which we call our internal structure. That's step number 2 of our 3 rule-based mechanical system. Is come over to the 15-minute time frame and we apply the exact same thing. So over here you can see we've got our 4-hour strong, our 4-hour break, most recent break of structure, our 4-hour week. So let's go and start labeling our 15-minute structure. What we just applied on the 4-hour time frame, we reapply on the 15-minute time frame. All right, so over here we have had that 4-hour break of structure. We then had this most recent low with that break of structure to the downside. So you'll see low, break of structure, pullback. Bearish shift, break of structure, pullback. Bearish shift, break of structure, pullback. Bearish shift, but price could not reach these weak lows over here and instead took out the previous strong high. So this is where our first M15 break of structure to the upside would have happened, which then signals, if we have a look at our 4-hour structure, which we can go and label this as our 15-minute boss, which stands for break of structure. All right, so this now signals we've now had that 15-minute break of structure to the upside after the 4-hour break of structure. So what can we expect to start? Is that overall 4-hour pullback until price shifts bearish and is now ready to go and target those weak lows. So let's keep marking this out just as we did on the 4-hour, and we continue marking this up on the 15 minutes. All right, so after that 15-minute break of structure, identify the lowest point in the previous range after this high that broke the structure, which would be this low over here. So at the time, this would have been our 15-minute break of structure. And what can we expect after every break of structure? Is that pullback. All right, to fulfill areas of the previous M15 swing range. Exactly what applies on the 4-hour applies on the 15-minute. Structure and order flow is fractal on every single time frame. That means it applies everywhere and anywhere and any time frame in the market. After price started that M15 pullback, we can go and mark this as our M15 week high. So what would be expectational order flow if I come back here? What would be expectational order flow at this time? Is for price to cater for that M15 pullback, is to have that shift to then go and target the M15 week highs. So that is what expectational order flow would have been at the time. And as you can see, that's exactly what price did. We had that bearish shift, we had that bullish shift, which then we had that body closure above. So we can go and mark this out as our new M15 break of structure, which was caused by the most recent M15 strong low. Now, what can we expect after every M15 break of structure, or any break of structure, is that pullback. All right, so after price had that pullback, we can then go and label out our M15 week high. So at this time, what was expectational order flow? Is for price to have that pullback, fulfill perhaps demand areas or just general areas of the previous M15 swing range, to then shift bullish to target the M15 week highs, which is exactly what happened. We then had that M15 break of structure to the upside right here, and we need to find the lowest point in this previous swing range that created this break of structure, which was this low point over here. This wick right here was the lowest point. But now this is where you need to keep things in mind. If we have a look at our 4-hour structure, we're currently near our 4-hour strong. And remember, 4-hour expectational order flow and expectations is to target the 4-hour week lows. So what could we now expect? All right, we could expect that bearish shift for price to now go and target these 4-hour week lows. So would it be wise to now, after this M15 break of structure, after that M15 pullback, to rather go and look for longs to target this 4-hour strong high? No, because that is not expectational order flow. That is not where price and structure and order flow is moving. So what we would have to do over here is wait and see if we get that M15 shift to the downside. All right, so over here we had that M15 body closure right here. So that would be our M15 boss. And now we need to find the highest point in the previous swing range that created this break of structure, which was this high point over here. So this would be our M15 strong. After that M15 break of structure, what can we expect? Is that bullish shift to the upside, that fractal pullback, to cater for the overall M15 pullback. So over here we then had this very sharp bearish shift to the downside, which was FOMC, I think on which was FOMC on Thursday the 6th of July. But I want you to also take note of this. Take a look at how, after we had that M15 break of structure, our strong swing high, we then at the time had this week low. So this would have been our valid M15 week low at the time. When news kicks in, take a look at how beautifully it just follows order flow and structure. I want you to remember this quote. News is the excuse to move price in the direction it was already going to go, which in this case, news is the excuse to move price in the direction it was already going to go. And that is exactly what we had over here. FOMC kicked in with a lot of volatility and a lot of news, but all it did was went the direction to go and target these 15-minute week lows. So we then had that M15 break of structure to the downside right here. And what can we expect after every break of structure is to have that pullback, right? So over here, after this pullback started, we can now go and label our valid M15 week low. All right. So over here, as we've now shifted bearish, expectational order flow on the 4-hour is to now go and target the 4-hour week lows and the M15 swing week lows. We need to go and find the highest point in the previous swing range that caused that break of structure to the downside, which was this high over here. All right, so at the time, this would have been our M15 swing strong and our M15 swing weak. Over here was when NFP kicked in, all right, and all we had now was that bullish shift to the upside. So what does this mean? We now have that M15 boss. This M15 swing weak now just becomes an M15 swing strong. Why is it a strong? Because it took out the most recent strong high. Therefore, that switches from weak to strong. So what does this mean now? Okay, we've now had that bearish shift and then that bullish shift within the overall 4-hour swing range. That means price is just currently ranging in the 4-hour swing range, and we would rather need to wait for confirmation either for that M15 shift to the downside, that pullback, to then go and target these weak lows. And if price still continues bullish, we could then perhaps expect price to take out the 4-hour swing strong high, that 4-hour pullback, which would then be valid to look for that M15 shift to the upside, to then target that overall M15, to target that overall 4-hour week high. So all this rule-based system is, it's a reaction to what price prints for you. All right, so let's continue marking this up. So after every M15 break of structure to the upside or downside, right here, what can we expect? Is that pullback into the previous M15 swing range. So this now becomes our valid M15 week high. This is a week high because it wasn't able to take out any previous strong. So this is where we currently lie on gold. Price expectational order flow on the M15 is to continue pulling back, perhaps mitigate areas of demand, to then target the M15 swing week high. But keep in mind, the overall 4-hour time frame is for price to target these week lows. So if you wanted to target these 4-hour week lows, you would need to wait for that M15 shift to the downside, which price would need to break structure to the downside. It will have that pullback, most likely mitigate areas of supply in the previous M15 swing range to then target those weak lows. So all it is, again, it's a reaction to what price prints for you. So let's go over exactly how you are going to go and enter this. So this is step number 3 of how to go and actually trade this. So step number 3 in this entire trading plan is to go and identify the supply and demand zones with 4 strict criteria that I'm going to make note for you and that I want you to make notes of. You'll see over here I've actually got a little sticky note. So if you want to go and add the sticky note to your chart, it's a indicator or a tool called Spin Notes on TradingView. So click on indicators, go type Spin Notes, click on it, and it will open up a notepad on your chart. Right click, click settings, and I want you to go and make these notes. In order for a supply and a demand zone to be valid, you need to look at the most recent candle that created a fair value gap, or also known as an inefficient push. So what a fair value gap is the gap between 3 consecutive candles. So if you take a look at these 3 candles here, all right, 1, 2, and 3, and we go and highlight the last wick of the first candle and the wick of the third candle, this gap over here in price would need to fulfill at some point in time. This is what we call a fair value gap or an inefficient push caused by the first candle. So that's criteria number 1. I'm going to create a notepad over here. So criteria for a supply or demand to be valid is 1, it must have that fair value gap, or also another terminology for that. Don't get too confused by this. It's the same thing at the end of the day, an inefficient push. Number 2, the supply or demand zone needs to be unmitigated. So you'll see this candle over here that created the inefficient push, price has never come back and mitigated or tapped this demand. So this would be counted as unmitigated, which would be criteria number 2 to make our supply or demand zone valid. All right, so that we can add there, unmitigated. I hope you are making these notes. It is super important to remember this. Number 3 is the supply or demand zone needs to create that break of structure. So over here was the most recent candle that is unmitigated. All right, number 2, that has had the inefficient push, number 1, and created the break of structure to the upside with this body closure. So that can be point number 3, must cause a break of structure. Finally, number 4, the supply or demand zone needs to have some type of liquidity or inducement above or below it. So in this case, you'll see over here, all right, so price had that break of structure to the upside, tried to pull back over here and mitigate areas of demand, but just couldn't. So over here, we had lots of buyers. Let me just remove the pen. Right here, we had lots of buyers entering the markets, which there would be a lot of stop loss liquidity sitting just above this demand zone. You'll see over here, we also have some type of trend line liquidity. Lots of liquidity, buyers and sellers entering the market. So what can we expect? Right, expectational order flow is to target these swing week high. So we can expect that sweep of liquidity to fulfill that fair value gap, mitigate our demand, to give confirmation, to then continue targeting these M15 swing week highs. If you are an existing member of our community at MM Funded, you would know what I'm talking about as you've been through our private mentorship in the Discord. But everything that I'm breaking down for you right now in this YouTube video should give you a really good understanding of what makes a supply or demand zone valid. So that would be number 4 is the liquidity build-up. Just to give you an easier way to identify liquidity. Liquidity can be in the form of double bottoms that are above a supply or demand zone that we can expect to be swept. Any kind of trend line liquidity like we are seeing right now, triple bottoms, any type of wicks that you just see above the demand zone that we can expect to be swept. So it's any type of, you can say, chart pattern that is above the supply or demand zone. So in our system here at Funded, our 3 rule-based system, we use chart patterns as liquidity to enter in the market when everyone else has been stopped out. So you can also make a note of that. That is what we are utilizing over here in our supply or demand zone. So on Monday next week, I most likely will send this trade to the Discord. This is actually the area of interest that I'm looking at. So I might live stream this with the guys. If you want to catch this live stream with me, you can access through the first link in this video. So that is our first 3 steps in this mechanical rule-based system. So let's just quickly recap this. Is step 1, when you hop onto any chart, is mark out the 4-hour structure like I've just explained in this video. Step 2, repeat the exact same process on the M15 time frame. Step 3 is mark out the candle that created the boss with these 4 criteria. So your supply or demand zone needs to have these 4 criteria. In this case, this is a perfect example right here. All right, so this was the demand zone that had the fair value gap and inefficient push, is unmitigated, created that break of structure, and has that liquidity buildup in the form of trend line and inducement over here. So let me go through another example right over here. Where was the most recent supply zone? Comment down below. Which candle was the valid supply zone that had the inefficient push, the break of structure, is unmitigated, and had the liquidity buildup? I actually took a trade off this candle on Friday. I sent this trade to the group and we hit full TP. All right, so that candle would be this candle over here. This was the most recent candle before that massive inefficient push, break of structure to the downside, and then all of this over here, inducement, this entire slow price action right here is all a liquidity buildup. And as you can see, as NFP kicked in, we had that sweep to the downside and that sweep to the upside. So right over here where I took entry, when price mitigated the supply, I took what you call a triple break of structure to the downside on the 1 second time frame is confirmation. But don't worry, you don't have to hop onto the 1 second time frame. There is an indicator called a triple M entry confirmation. So if you come over to indicators and you go and type triple M, it will be this one over here called MentFX triple M. And you can go and add that to your chart, and it highlights these wicks as triple breakers of structures on an extremely lower time frame, which is a very powerful entry confirmation that will give you that confluence that the supply or demand zone is holding and that sellers or buyers are entering on that specific zone. How I took this trade over here was as price mitigated this supply zone. Remember, on the 1 second time frame, this is all in the forms of structure. We then had that triple break of structure to the downside, so that's 1, 2, 3, which then our indicator gave that confirm, which I entered about over here. I entered a 1-to-1 risk to reward with 40 pip stop loss, 40 pip TP, risking 2% on my prop firm account, which was a return of $4,000. So I know most of you may be asking, why don't you target high RR trades such as 1-to-10s or 1-to-20s, or target opposite sell side or buy side liquidity? It's because this is just my preferred way of managing risk. My psychology in the market, what I've discovered about myself as a person and a trader, is I like high win rate but lower risk to reward. I used to trade targeting 1-to-20s, 1-to-30 risk to rewards, but I discovered I make the same profit, sometimes even more in a month, trading like this, because instead of now having a 20% win rate, targeting 1-to-10 risk to rewards with a really tight stop loss like this and targeting it all the way down, I now have a 90% win rate, just targeting 1-to-1s like this and risking slightly more on the trade. So all I'm doing is applying the exact same system, just applying different risk management. Again, those in the private funded private community will understand what I'm talking about. But if you're new here, hopefully you still get an understanding of why I trade like this. So that is why all the trades I send to my community, a lot of the traders that trade with me bag really, really solid profits because we have such a high win rate. And not only are you trading with me, you are understanding the story behind every trade so that you can become an independent trader yourself so that you don't have to rely on me, which is what I am most passionate about here on my channel and in my private community called Funded, is to help you become your own independent trader through this mechanical rule-based system. So that is really a breakdown of how we enter. Is a triple M entry confirmation on the 15 minutes, or you can use the 5 minutes if you'd like as well. I personally prefer the 15 minutes. So hopefully now that you understand your 3 rule-based structural system plus your 4 rules to identify the supply or demand zone, you can now put this into action yourself, apply this, and become a consistent trader yourself. As I mentioned in this video, if you guys want to get access to my live streams, how I trade this live in action, how I manage risk when I set BE, how I like to protect my capital when trading and maximize profits as much as possible, and how hundreds of other traders that are trading with me in the community are bagging profits on a weekly basis. That will be the first link in the description. My artificial intelligence tool that I have designed for MetaTrader 4, which completely automates my users and my members' prop firm accounts, their live accounts, their personal accounts, and makes them anywhere between 5 and 40% per month, depending on if it's a prop firm or a personal account. There will be tons of more information on that AI tool in the link, the second link in the description. I will leave that down below as well. So I recommend go and practice this, go and apply this to your charts, start seeing it yourself. You will nail it. Watch this video a few times and you will get there. Without further ado, guys, take care, and I'll see you in tomorrow's video, and I'll see you inside of our private community down below.